US dollars opened this Monday's trading session on the defensive. We had some data releasing on Friday that showed that US inflationary figures came in slightly slower than expected. The year-on-year inflationary figures from the US came in at 2.2%, well below the 2.3% expected, while the month-on-month CPI reading showed in line with expectations at 0.2%. Following this release, we saw the US dollar sell off rather aggressively. It broke below 99 levels, and now it's been consolidating around this level of 99 through Monday's session. We did have some developments from the weekend. North Korea did launch its another test missile. The difference between this missile and what was launched earlier back in April was that this missile was traveling and cruising at a higher altitude and traveled an even further distance. But markets shrugged off this risk-off type of sentiment and instead chose to focus more on the inflationary numbers. Remember, along with growth and jobs, the inflation data is a key part of Fed forward rate policy, and this probably spooked some of the markets. Although we did see a weaker than an expected inflation report, the overall sentiment in the markets remain above 90% that the Fed will look at continuing their hiking cycle come June. But we will continue to see how that data changes in the lead up to June's meeting. But overall, the dollar does remain on the back foot. Another major piece of news that came out this morning was that Saudi and Russia basically agreed to continue the production cuts, freezing at the current levels, and they've extended it for a further 9 months, set to expire now in March 2018 from a revised period of June 2017. This caught crude markets by surprise. There was a little bit of a rally. We've seen crude prices increase 2%. The West Texas Intermediary contract has moved up $1 higher. And now on an intraday basis, we expect to see good support coming in to the West Texas Intermediary contract at 48.74 levels. This is a key level because it's a convergence of the nine-day moving average and the 26-week moving average, and we should expect this level to hold in trading today and tomorrow. We look for upsides in the West Texas intermediary contract to be capped off at 49.50 levels. This should be filled probably by today or tomorrow in trading. Also, as a result of that weaker US dollar, gold prices have reversed and they have moved higher. We're looking for support to come into gold at 12.28 levels today. Upside target should be capped at 12.35 in trading today. If we look at the euro is going to range in the mid 109 levels. We're expecting good support to come in at 109.30 levels today, with upsides capped at 109.70. If we look at GBP's also moved up above that 129 level. Remember, we had the MPC meeting minutes release on Thursday. GBP was not able to break through that 130 barrier despite the downgrades in growth forecasts. But overall, we expect this channel between 129.50 and 130 to still remain a very, very strong and stiff resistance for GBP USD. So it would make sense if we see another big move towards 1.3, it would make sense for a quick short with maybe a 70 to 100 point target going forward. The economic calendar from the US remains rather light, so we will expect to see a little bit of dollar weakness going through trading today before we see maybe a slight reversal in trading tomorrow.